and I hope that you are all keeping superbly well this evening and of course this morning as well, wherever you're tuning in from. My name is Susan Hayes-Cullerton and I am here today to talk to you about setting and achieving fantastic Female Friday sort of goals. So first and foremost, can I say a super big hello to everybody, and I'm just going to ask everyone to please just chat into the window, let us know where you're tuning in from. Already I can see that Lara has said hello. I know that Lara is based in North Carolina, for example, and I am guessing that there's going to be several more going to be tuning in there as time goes on. So you're super welcome. Now, today we're going to talk about financial goals, and the reason that we're going to do this is because I see so many people getting this part wrong. I have to say, I see lots and lots of people where they set financial goals, but the problem is that they actually would never know if they achieved them. And when I think about this, and I think about how sad this is, because then people often think, well, maybe I'm a failure, or maybe I didn't get around to doing this right, or maybe I could have done this differently, etc. And I think that that's such a pity. So today what we're going to do is we're going to sort that. We are going to sort that right out today. And we're going to talk about taking a financial goal. We're going to talk about setting it effectively. Then what we're going to do is we're going to think about the stuff that nobody ever thinks about really, which is how to put the subtle things in place to make this happen. And most importantly, how you will know if you have actually achieved it. So just as I'm just going to say hello here to a couple of people, I can see you're tuning in today from Ocala in Florida, from Raheny, that's in Dublin, from Akron, Ohio, from British Columbia, from Alberta, Canada. A couple of people from VV Nation, who I met yesterday on Glenn's fantastic Trending Thursdays. I had a fantastic time on that show yesterday. From the UK, hello, Noreen from Dublin. So really delighted to see you all. Okay, so what I'm going to do now is I am first of all going to show you right now. I'm just going to share my screen here with you, and I'm just going to show you a couple of things that I often see people coming up with from time to time, right? So things like this. Financial goals, what do they mean? They mean investment, they mean they wish they never had to worry about money, they would like to buy luxury goods, they'd like to buy a car, start a business, the pocket is full, saving for retirement, they want a house, pay off debt, travel to nice places, emergency fund, saving money, etc. Now, the problem with a lot of these is that how would you know if you achieved them? How would you know? So I'm going to take one there, for example. I wish I never had to worry about money. How would you know if you never worried about money? Right now, I'm not worried about anything except you and me and us having a good session here today. So does that mean that I don't have to worry about money? Does that mean then that I have achieved that financial goal? Well, you see, the thing is that when we say things like this, what we probably really mean is that when we are focused with money, then we wish we didn't have to worry about it. But when we're not focused on money and we're not worrying about it, then we still haven't achieved. See where I'm going? Is that this gets really confusing. Somebody here might say, for example, buy a car. Well, the problem with that is, do they mean a really old car that is on its last legs and that probably won't be able to see them through for much more? Maybe not. Maybe what they mean is they might have a Jaguar in mind, or a new car in mind, or a better car in mind. So what's important is to be able to move to goals like this, which are really worthy and full of merit. There's no doubt about that, but in such a way where they're actually clearly identifiable, as though you'd know if you had actually achieved them. So what I'm going to ask you right now is, I'm going to ask you a particular question, and I am going to move over here to a different screen, and I'm going to copy a question, and I'm going to put it into the chat. So can I ask you all to please go to this link, okay? And I'm going to share my screen now, and I'm going to share what happens. So can I ask you all to please go on that link, and I just want to ask you a question. So during today's session, I want to put you in the driving seat. And what I just want to hear is that what is it that you want to focus on? So if you click on the link that I put in the chat, or you can go to menti.com and you can put in the code there that's up there on your screen. And I just would like to hear from you. What do you want to focus on? So when it comes to financial goals, what is it, let's say in the year 2020, that you might like to focus on? So is it learning? Is it saving? Is it spending? Is it investing? or is it getting your stuff in order? So I would just like to hear from you. What is it that you personally would like to focus on? And the reason that I'm asking this is that people have different ideas for different things. They really, really do. So I am just gonna leave that there for a moment. And right now I haven't seen anyone come through, so I'm just gonna check the chat and just see, is everyone okay? If I just go over to the link there. Okay, so if I'm just going to ask you to click on the link that you've got, the one that I put there. So all of the above, learning and investing, great. Okay, all of them, investing, learning and investing. Okay, right. Getting it in order, investing and saving, all of them. Right, so I can see there that there's lots and lots, but particularly the two that stands out is, well, one. Okay, so somebody says here that they can't see the link. Okay, just going to pop it into the chat there again, guys. There you go. Okay, and also you can go on to menti.com. Okay, very good. So you can go on to menti.com, as you can see there at the top of the screen, menti.com, and you can use the code. Okay, so now people are starting to get their thoughts there. Okay, so 33% of you so far are saying learning, 50% of you so far are saying investing, 17% of you so far are saying saving. Okay, so as I say, please do keep your comments coming in there, or keep your votes coming in through there, and I'm going to check back in there a little bit later on, and I'm going to see how you're doing, because I think it's interesting to get a sense of perspective on this, because when I go back over to the chat, I can see, I see Andrea there now has just said that they can't see. Okay, yeah, right, sorry. Just to be clear on this one more time, that if you want to go to, just to get your vote in on this, go to menti.com and use the code at the top of the screen, which is 78225. So Cara says still no link. Yep, Cara, just go to the top. You'll see there, if you just go to menti.com, and yeah, okay, now I see lots more. Menti.com, and put in the code at the top there, 78225, and that's exactly how you'll see the poll there that's running. Okay, right. Now, so what I can see here is, as I say, lots and lots of interest in investing. We're going to talk about that today. We're going to talk about that every day here at Fantastic Female Fridays. We're going to also focus an awful lot on learning and a wide range of other things. So please do keep your comments coming in there on that. We're super happy to hear them, and I leave that run there right throughout the session, because it's really good for us to know where you want to go, and of course we always want to make sure that you are sitting in the driving seat. Okay, now what I'm going to do now is I'm going to move on. I'm going to check back on that there from time to time and just see how you're all doing. Right, now the first thing we need to do when it comes to setting effective financial goals is that we need to think about how to make it measurable. Okay, so what I mean by that is, how do we make sure that you would know if you achieved those goals? So I'm going to give you an example, right? So here are some examples of financial freedom. By the way, on my other screen, I can see all your votes coming through, so I'll check back in with you there in a little while. Here are some ideas that we might have on financial freedom or financial goals, etc. Is to not have to worry about money, no more debt, and to be able to go on nice holidays. And what I am just going to ask you is, if you knew you achieved your goal, if you did definitely know you were going to achieve your goal, what would that goal be? So let me put this another way. How would I know that I would not have to worry about money? Well, how about this? If I had $50,000 of income and $20,000 of savings, then would I know that I have achieved financial freedom, or that I no longer have to worry about money? Now, for some of you, that number is too low. Some of you would say, well, I really wouldn't be too happy with that. I'd prefer if it was higher. And some of you, on the other hand, would say, well, $20,000 savings, I'm not sure really that I need that much to not worry about money. Maybe it's less. It's not the point. The point is I'm putting a number on something now. I would know, if that was my goal, I would know if I had $50,000 of income in my account, and I would or on my payslip, and I would know if I had $20,000 of savings in my account. It's a number. I can see it. So then we change from this one to not have to worry about money to putting a number on it and say, well, what would that be? Would it be wealth? Would it be income? Would it be diversification of income? Would it be a pension? So you decide. You decide. I'm totally open to what you say on this, but you decide. Now, the second thing is what about no more debt? Well, you see, the thing about no more debt is it's great. Having no debt is great. What if you didn't have any money either? That's probably not ideal then, is it? You probably want, well, I don't want any debt, but I also want money, or I also want income. So let me put this one to you. How about this? Instead of saying I would like no debt, how about I would like to get to a point where I've paid off my debt, but my maximum spend is 80% of my income, so I don't get into debt again. Because a lot of people get out of debt and then just kind of fall back in again. And you know why? Those of you who were here 2 weeks ago will know why. It's because of their financial thermostat. That is why. That's often why this happens. So when it comes to thinking about debt, it's not just enough to say, yeah, I want to get out of it. Because then if you don't have any money at the same time, you're not going to be able to live your best life. So how about this? How about putting a number on, I'm going to spend a maximum of 80% of my income, 90% of my income, 95% of my income, or something like that. But put a number on it. Again, the key test that every financial goal should go through is, if I achieved it, would I know? Would I know? Now, the last one here I'm gonna talk about is to be able to go on nice holidays. Now, obviously, we're all in a very different sort of scenario due to lockdown and all that's going on at the moment. But the thing is that, well, holidays have kind of meant a different thing for us this year. I love going over to the team in VectorVest. I love going over to Ohio and visiting the team in North Carolina. And I love my time in doing that. But this year, probably not going to be possible. So this year, we're going to have a staycation instead. So when we talk about being able to have nice holidays, what does that mean now? Well, does it mean that you can have a lovely time with your kids, with your partner, on your own, going to a new part of the world? New part of the world being, of course, your own country or your own state or whatever it might be. So the thing is that often people think, well, I'd love to be able to go to a really sunny place and have an all-inclusive and all that sort of thing. And they think, no, but I can't. And they don't even think through exactly how much it would cost to get there. So why don't you do that? If you're somebody that says, oh, I'd love to be nice to me. I'd love to be able to go have a facial every month. I'd love to be able to go to a certain part of the world for a week this year. I would love to make sure that I had enough money to go and study a course in university. Well, then research it. Find out. Maybe it is easier than you actually think. Maybe it is. So when it comes to this, maybe it is that you might say, okay, well, now I need 3,000 euros per year to spend on holidays. And maybe a surprise is waiting for you. Maybe it won't be that much. Maybe offers will be available that you hadn't looked at. And maybe you'll simply allow the universe to bring lovely stuff right into your life. I'll give you an example on this. I'm a lecturer on a program that happens here in Ireland called Global Financial Markets, and it's run by Ulster University. And this program is 90% funded by the government for anybody in employment and 100% funded for anybody who is unemployed. And there's a range of these, what we call springboard courses, that are on in the right around Ireland over the next couple of months. And this has been the government's response to dealing with any long-term unemployment and also upskilling the country to be able to handle the new types of jobs that are coming as a result of Brexit or that are coming as a result of changing and disruption in industries. And the reason I bring this up is I was talking to one of the students who had moved over, I think it was from Italy. And she said to me, my dream was always to pursue a course after university. My parents had to work so hard to give me an opportunity to be able to go to university at home. And then I moved to Dublin and I thought, I'm never going to be able to rent a flat and be able to afford to live a life and be able to afford a postgraduate course as well. Just didn't think that I was possible. And then she said, I was searching around, looking online. I came across this course, 90% funded by the government, because of the skills that I didn't even realise that I had that were of interest to the government to upskill. So there you go. What happens is you start looking for that goal, and you might just be surprised at the resources that are there in order to help you move along. So just want to mention that as well, is that when it comes to this, it's important to put a number. Now, what I'm going to do in the latter part of today's session is I'm going to focus on investing goals, effective investing goals. For example, maybe you might like to be able to simply buy your first share. End of. Maybe it is that you simply want to be able to buy a couple of shares where your dividend yield is over 3%. And to some of you, that won't make sense yet. Don't worry, by the end of the show today it will. Maybe you will say, well, I would like to invest in the market, but what I would not like to do is lose any more than 25% of my money. They're effective investing goals because they're action focused. You would know if you've achieved them. They're certainly possible. And also they are completely within your ability to implement right now. And that's what an effective goal is. The thing is though, is that how would we maybe have an acronym that could help us here? And I'm sure you've all heard of SMART goals. Well, SMART goals are S for specific, M for measurable, A for attainable, R for realistic, and T is for time bound. Okay, so I'll just mention those again. S is for specific, M is for measurable, A is for attainable, R is for realistic, T is for time bound. But let's not stop there. Let's go 2 more letters, ER. We at Fantastic Female Fridays, for you savvy women investors, we want to have smarter goals. And E is for extending. And extending means, how will this push you forward? How will this maybe push you out, maybe outside of your comfort zone, or push you to do something that you haven't done before? How is this going to push you forward? That's what E is for, extending. But the most motivating letter is R. Without a doubt, the most motivating letter is R. And R is for rewarding. How are you going to reward yourself when you do this? So if you do go on to buy your first share, I mentioned yesterday, I noticed on the chat during Trending Thursdays, one of you said that this show has actually already given you the confidence to go and simply buy your first share because you weren't sure about simply moving forward before. And maybe you didn't quite have the confidence, or maybe you realized your financial thermostat was holding you back. Well, how did you reward yourself for doing that? That's a big deal. I remember buying my first share. I remember selling my first option. I remember my first time talking about this area. I celebrated the night that we had our first Fantastic Female Fridays episode. So therefore, it's so important to reward yourself. So can I also ask you before we move on, whatever your financial goal is, how are you going to reward yourself for getting it? Or what is the reward? Is it all just pain? Is it that you think, oh, okay, I should have this, I should have that, I should have the other? And almost that achieving your financial goal would just basically mean moving a little bit of guilt off your shoulders. Well, let's turn that around. Just like I spoke about 2 weeks ago, let's think about your sunny day fund. If you have a sunny day fund, if your goal is that you want to have €5,000 or $6,000 in your sunny day fund, just so that who knows what opportunities may present themselves. Let's say that you do that. Let's say that you go and you do that. How are you going to reward yourself? And it doesn't have to involve spending money, but just maybe it is that you're just going to just take a moment and reflect on it, or maybe you're going to write yourself a letter from the future thanking yourself for doing it now, or whatever it might be. Just remember that. So that's the SMARTER acronym. Specific, measurable, attainable, realistic, time-bound, extending, and rewarding. That's what it is. So how do we move towards that? Well, the next thing that I think is really important is to dream. You need to dream. You need to give yourself time to dream. This has to happen. You need to give yourself the space to dream. And also you need to journal as well. I find that sometimes I just can't get it out. I just can't get my thoughts out. And if somebody said, okay, what's your financial goal? I think, well, it could be this, it could be that. And that is because you don't create the space to simply let your thoughts form. So what I would suggest to you is to simply sit and think, but write. And the reason I say write is that it takes longer for your hand to write than for your words to come out of your mouth. And that takes longer than your thoughts to form. So you can think. But the thing is that actually by doing that, you're not letting your thoughts actually allow to form. So that was what I would say is just maybe just at the top of the page, write something like, what is my smarter financial goal? Just think about that and write. Write until you've nothing left to say. And then let's see where you go. Okay? Now, the next thing that we're going to have to think about here is a lot of financial goals have nothing to do with money. Yes, a lot of financial goals have nothing to do with money. I'm going to say that one more time. A lot of financial goals have nothing to do with money. Can I give you an example? My husband and I started talking about moving house earlier on this year. Okay? Now, you might say, how is this story going to lead to talking about nothing to do with money? Well, bear with me now here for a moment. So when it came to this, let's just think through what actually needed to happen. Well, for a start, we needed to get the house ready to be sold, our existing house ready to be sold. So that meant clearing out certain closets, putting stuff into boxes, thinking about where we were going to live between selling the house and buying a new house, getting paperwork together to apply for a mortgage, going back and getting the correct paperwork in terms of payroll slips and all that sort of thing. Did any of that have to do with money? No. It had to do with boxes, usernames and passwords to get the correct forms, looking up websites to look at what financial institutions were offering the best mortgages, having a conversation between him and I about where we wanted to go. All of that actually had nothing to do with money. And believe me, no matter what goal you're thinking about right now, an awful lot of it does not have to do with money. Let's say it's investing. Let's move over there, right? If you're thinking about setting up your first trade, then it's going to be about getting your forms together so that you can apply for an account. It's about getting your proof of address and a copy of your passport and various other different things. That's what you're going to have to do. Then it's going to be about refining the list of stocks that you might want to buy or understanding what stocks that you want to buy. Maybe it is overcoming your financial thermostat to actually realize, I've never done this before and I'm nervous. See what I mean? Is again, a lot of financial goals have nothing to do with money. However, they can often have an awful lot to do with the other people in our lives. So I would also encourage you to think through is that if I have a financial goal, which is I would like to take the kids to such and such a part of the country, do they want to go? Do they? Do they want to go? Do they have their own ideas in mind? Because you know what's really tough is when you work very hard to create something for somebody and then they kind of don't really thank you for it. So that's why, again, I would go back to the conversation that my husband and I had about moving, is that we had to think about, well, where do we both want to form the next part of our lives? What environment do we want to live in? What's important to us? Geography. What sort of geography did we want? What lifestyle did we want to have? Again, all of this, if I was, let's say, holding back and not saying what I thought, or maybe he did the same, or maybe I resented what he said. No, I didn't at all. Or maybe if he was trying to anticipate what I wanted and was acting in a certain way, but didn't explain it to me what he was doing, it led to confusion. It might have ended up in an argument where we were blaming each other for holding the other one back. So you see, actually, a lot of stuff to do with financial goals relies on communication with other people. So they're the key 3 things that I wanted you to take away from today before we got into talking about investing goals. And that is, number 1, let's go through them now one by one, is that how would you know if you achieved your goal? How would you know? And that comes down to a number. That comes down to a number or a feeling that you can absolutely guarantee. You know that if you have $50,000 of income every year, okay, that's your financial goal. And if you know that you have that coming into your account the monthly version of it, then you know you've reached it. Let's say you're saving for a wedding and you want to save 30,000 euros for a wedding. Let's say that you want to go away on a holiday. Let's say that you want to take time out of work. Maybe you need to create the space and the income so that if you're going to take unpaid leave out of work, you know how much it'll cost and you know what will happen as a result of doing that. So that's the first question I have for you, is how would I know if I achieved my goal. Okay. Second one is, how can I start acting as if it's happening? Now, did any of you ever feel fitter just because you had a fob for a gym in your pocket? Yes, me too. The thing is that it's interesting how when we start doing something, then it feels like it's happening. And I remember, going back to a gym analogy, I went into the swimming pool today for half an hour to really think through everything that I wanted to share with you today. And you know, it's interesting that in a gym that I went to with a friend of mine one time, I walked in and there was a sign on the wall that said the hardest part is already over. And what I kind of said, what do they mean? You have to start, pumping and sweating before that happens. And they said, no. They said a lot of the time, the work that somebody has to go through in order to motivate themselves to just get in the door, that's the hardest part. It's moving forward. It's actually getting into the gym is the hardest part. And then getting on the bike or getting on the treadmill or getting in the pool or whatever, that's actually much easier. So what I'd say to you is think about how can I start acting as if it's already happening? So in my case, let's say that we were saying, right, we're going to move house. And I'm not sure if we can get the mortgage that we want. I'm not sure if we can afford the house that we want. I don't know if we can move to the area that we want. But you know what? I'm going to start putting things in boxes so that I'm telling the universe, this is happening right now. And of course, the universe may or may not care. But what I'm trying to do is tell myself is to stop asking if I can and start talking to myself as though it's happening and how it can, when it will, and it will. So that's the other thing I would say to you is how can I start acting as if it's happening? So if you're nervous about, setting up a stockbroking account or taking your first trade, simply start researching various different brokers now and look at or Google or YouTube ways in which you can buy a share. I will be doing that on a future episode soon anyway. That's what you need to do. Start acting like it's happening. Just go back to that gym analogies. The hardest part is already over. So if you keep going over and over and over again, can I do this? Can I do this? Am I able for this? That's going to eat away at the motivation that you need to push through. So start acting as though it's happening. Okay. Then the next thing I'm going to ask you is what non-financial things do you need to do? What forms do you need to fill out? Who do you need to talk to? Who do you need to communicate with? There's a difference. What do I need to do to actually move forward? As I said to you, a lot of financial goals have very little to do with money. And the last question is, if this was fully manifested in a year's time, what would life look like? So if this was absolutely fully manifested in a year's time, what would life look like? And that's the question. That really is the question. They're the 4 things that you need to think about right now. And I would say, just think about it. Sit down with the journal, or you just an empty sheet of paper at the top, say, what is my smarter financial goal? And throughout that, use those 4 questions to prompt your thinking. Now, what I want to do with you is that I want to make sure that we talk through some effective financial goals simply in the area of investing. But before we do, what I'm going to do is right now, I'm going to go over and I'm going to take a look at where we're at over here. So we've had 18 people fill out this poll, and so far 37% of you have said that you would like. Anybody can still, by the way, interact with this. Just go to menti.com and you can use that code 78225 and you can get your thoughts in there as well. So 28% of you are learning. Please do make sure and be with us every single Friday. I'm so excited to be here. Every second Friday. That's when Fantastic Female Fridays happen. So really happy for you to be here. And we've got some amazing things lined up for you in the next couple of episodes. 16% of you said saving. Just 2% of you so far have said that that you want to focus on spending in your financial goal. 37% of you said investing, which I'm super happy to hear, particularly since this is a show dedicated to women in investing. And 16% of you said getting your stuff in order. So the next question that I was going to ask you is this, which is now, what is your financial goal? Now that you've heard me speak about this, just going to ask you, the reason I'm asking you today, while we are running this, you can go back onto that menti.com and use that code. The reason that I'm asking you this is when you actually commit it to paper, when you can actually commit a goal to paper, or in this case, digital. When you do that, it's actually far more likely to happen because you have to crystallize it in your mind. And the second thing is, so you can see it's completely anonymous. I don't know who's telling us this. I'm not reading the individual people who are answering this. But the point is that by simply documenting what it is that you want to commit yourself to, and committing it to the world, as you're doing right now, but anonymously, and it has actually a very powerful effect. So as you can see here, as words are appearing more often, the word cloud actually thickens, and also anything that appears more than once, you'll see that the font will actually grow. So here we have saving for retirement, confidence. You're at the right show, guys. You're absolutely the right show. Growth, education, investing. So this is the whole idea of what is your financial goal. Just, put it out there. Put it out there. I'm going to leave that running it as well in the background. So it's simply at menti.com, and you can use the code 78225. That's the way. And I'll check back in there again later on. Of course, please do keep your chat coming there as well. It's great. Really, thanks, Jen. Thanks for popping up the code there. And I'm really happy. Going to check in there afterwards, and I'm just gonna see what everyone's been saying there in a little while. But before I do, what I am now going to do is let's go over here to my screen, and this time, what we're going to do is I am going to give you some examples of effective financial goals. Specifically when it comes to getting started in the stock market. So I'm just going to let the VectorVest system power up here. So while it's doing that, let me tell you what a dividend is, and let me tell you what a dividend yield is. So a dividend is a payment from a company to the shareholder. So if you buy a company, then in some cases, some of those companies will give you a payment simply for owning its shares. That's all. So that's what a dividend is. Now, it's not guaranteed. We at VectorVest, we look at how likely it is, but it isn't guaranteed. But a lot of companies, if they pay regular dividends, they're likely to continue paying it quarter over quarter, year over year. And let's just say that you said to yourself, right, this year in 2020, I am definitely going to hold a portfolio of stocks. And portfolio means a collection. I'm going to hold a collection of stocks whereby each company or stock or index or whatever instrument I hold is going to generate a 3% dividend yield. So what does dividend yield mean? Well, dividend yield means that for every €100 or every $100 that I invest, then I will get a certain amount of money back. So if the dividend yield is 3%, it means that for every €100 or every $100 that I invest, then I get €3 or $3 back. That's what a dividend yield is. But in VectorVest here, what we do is that we have a system called Unisearch. And Unisearch looks through the whole database of all the US stocks, and it does the same for Europe, and the same for the UK, and the same for everywhere else. And let me just go in here into Unisearch. Just going to do this for the US market because as I'm looking around here, a lot of you are tuning in either from the US or from an area that likes to invest in the US. Okay, so what I'm going to do now is I am going to ask the system. I'm going to say I want a dividend yield greater than 3%. Okay, I only want stocks. I only want the VectorVest system to find me stocks where the dividend yield is greater than 3%. So what have I got here? Well, it's searching. That didn't seem too difficult at all. These are various different US companies where I can see here, not alone. Okay, I'm just going to highlight over here. See this here, DY? DY here. So we've got a dividend yield of 5.89 in this case. I'm just going to stretch this right out so you can see. 5.89. I've got one here for 6.11. I've got some. Now, these are kind of crazy. Some of them are pretty crazy, like this stock here. Antero MDSTRM, not quite sure what that is. However, the dividend is 20%. Now, you might say, where are these companies getting the money to be giving it away for free? Oh, no, it's not for free. When companies are giving dividends to shareholders, that is an incentive to hold their shares. They are paying you for the risk that, of course, the stock could go down. But where are they getting the money? Well, where they're getting the money is from their profits. Now, a stock like this, if it's giving away 20% of its profits this year, oh, how likely is that going to be to continue to keep on going? So you know what I want to do? I want, just like we spoke about last episode and the episode before, remember we spoke about the birthday game? The birthday game focuses on stocks with a high relative safety. It looks for stocks with a high consistency and predictability of financial performance. It looks for stocks that are safe. Safe in terms of their consistency and their predictability of their earnings and dividends. So I only want stocks that have an RS. Okay, so I'm looking for stocks with an RS, a relative safety of at least 1.1. I want above average safety in my companies. That is what I'm looking for. So 1.1. And if I now, I'm going to run the search and see how many can we find. It's searching. Well able to do that. It's well able to do that. So now, as you can see, I've gotten rid of all of those crazy kind of stocks there where we're looking at huge dividends where probably aren't all that sustainable. So I'm going to go one more time. We're going to ask for one more thing. My financial goal at the moment is I want a dividend yield over 3%. I want above average safety. And I want one more thing is I want all of those stocks to have a buy recommendation. Now, on another episode, I will take you through how a buy recommendation is formed. But for today, just trust me that I only want buy recommendations on these stocks. Okay, and I'm going to click OK. And I'm going to run search. Now, sorry, just while this is searching, I'm just going to ask one of the VectorVest people, guys, could you just maybe just share the link there where people can get a trial of the software if they want to try it out? It costs €10 if you want to try this out for 30 days. So you can do that in your own time if you'd like. Just if Glenn or Jen or any one of the VectorVest team wouldn't mind doing that, I'd appreciate it. Okay, so now here we go. Now I've actually refined my list of stocks whereby my dividend yields are above 3% and my relative safety is above 1.1 and all of my stocks have a buy recommendation. Now that means that I have got a portfolio where I'm putting in place a list or a portfolio of stocks where I know that they have achieved certain objectives. Now let's now talk for a moment about those of you who may be concerned about risk. Let's say that some of you are feeling, I'm not sure about this whole thing. And by the way, my job here with you today is never to get you to actually invest yourselves. My job is simply, or not my job, no one's giving me the job. I put forward to do this. All I want to do is to empower you to know more about making decisions that will positively affect your life. Whether you go on to invest or not is totally up to you. It's not going to affect me. I'm not here saying that everybody should. I spoke about that in the first episode. What I'm here to do is to show you how to make and optimize the decisions that you take in the best way for you. Okay, so let's say you're worried about risk. Let's say you think, thanks Jen, appreciate that. Let's say that you're thinking, okay, I do want to buy, but I don't want to lose too much. And I'm not really sure how much too much is. Okay, so I'm going to tell you what's called a stop loss, right? So I'm going to go over here to viewer and just to get ready to explain my point. Okay, so here's what a stop loss is. If I buy a stock, let's say Microsoft, right? I was talking to Glenn, who's on our stream today. Thanks, Glenn, for being here. Let's say I bought Microsoft this week, but I don't want to lose more than 20% of my stock. I can put in what's called a stop loss into my broker, and I can say, if Microsoft falls 20%, immediately get me out. That's called a stop loss. Very, very simple thing to do. And during one of the episodes that we're going to have in the next while, I'm going to talk to you about how to actually buy and sell and put orders like that in place. But I just want to tell you that it's possible. And for any of you that are worried about that, I just want to let you know that it is possible and it's immediately possible. And for any of you that think, okay, I don't want to lose everything, at all. And I'm not taking action now in case that happens. Again, I just want to tell you so that you're aware. However, there's also what's called a trailing stop loss. And a trailing stop loss is if the stock goes up, if the stock goes up, if the stock goes up, I want to never lose 20% of the peak. So that means that today the stock's 100, tomorrow the stock's 102. 6 months time, the stock is 120. Well, I don't want to keep moving my stop loss up and up and up and up and up. A trailing stop loss follows that peak. So it goes up and up and up. It actually, as the stock goes up, the trailing stop loss goes up underneath it. And therefore, if the stock comes down, then it'll hit it, as opposed to it has to fall all the way down to where it started off. So that's a trailing stop loss. And if that's not, if neither of those are kind of, say, right, yeah, I'm not really sure, that doesn't quite float my boat. Okay, well, let's go into Stock Viewer and let me show you one other thing that might be of interest here. And that is, let me take a look around here. That is the stop price that VectorVest puts in. Now, it's actually not on my screen here. Okay, so let me add in my parameter here. So I'm just going to put in, oh, sorry, yes it is, cancel. It's telling me it is. There it is, right over here. Okay, so this is a stop here, right? So a stop is the stop loss. Now what this is a 13-week moving average. So what that means is VectorVest has taken the average of the stock prices all throughout the past 13 weeks, which is a quarter of a year. And then what it does is it looks at that and it says, what's the average over the past 13 weeks? And based on risk, you're going back to our relative safety, what we spoke about there a little while ago, then it just adjusts it accordingly. Is that if the stock is high risk, well, then it tightens the stop. And if, on the other hand, if it's lower risk, it widens the stop. So that means that it basically gives you an idea of a stop loss in such a way that the closer it is, or the riskier it is, the tighter the stop will be, so that it can help you manage your positions in a better way. But then the lower risk it is, the more breadth it gives to the stock to be able to, have that little bit of volatility but still push through. So that's what I wanted to say to you about having an effective financial goal, is that you could say, right, I do not want my positions, my stocks, or my portfolio to fall any more than 20%. Perfect. Well, then implement it. Simple. Put in a stop loss that is at, let's say, 20%. Put in a trailing stop loss, which is one where that if the stock goes up, then the trailing goes up with it. Or the third option is you can simply look at the way VectorVest has a stop loss and the way in which it's put in there. Now, just want to say, in case you're wondering, well, you say, right, I'm not right sure if I want to take a try at the system, but I would like to know what stop loss VectorVest has for a certain stock. Sorry guys, again, can I go back to Jen or to Glenn? Can I ask you just to put in the link for the free stock analysis, please? So what that is that you can get up to 9 of these guys. What you can do is you can just click on the link that one of the team is going to post there now. And then what you can do is that you can check out the stop and the relative safety and the dividend yield, all of the metrics that I've been speaking about. You can check them all out to do with any particular stock, and you can do that completely for free. Okay, so you can do that. Okay, so what I'm going to do now is I'm just going to pop across there. Let me go over here now to the comments and let's see how we are doing. Okay, what I'm going to do is I'm just going to pop that out so that it's easier for you to see. Okay. Now, wow, wow, you have been busy with your financial goals. Okay, so you're saying investing. I love the person who said 100,000 in discretionary. Got a number there. Delighted. Freedom, protect, worry free. Capital appreciation, profit on a business, sunny day income. I love the fact that our sunny day income is setting in there. Okay, that's great. Business startup, meeting experts, inheritance, independence, making good networking, home ownership, get income from rental. Great stuff. Love it, love it, love it, love it, love it. Again, now you're thinking. Now you're really, really thinking through. So just like I mentioned to you earlier on, just take some time, think, ask yourself, what is my smarter financial goal? What is it going to be? Who do I need to talk to? How do I start acting like it's already happening? How would I know if it definitely was to happen? Okay, so I'm just going to take a look at the comments over here, just moving them over here to see what you've been saying. So I can see we've had lots of hellos, which is super. Oh, we've had, hello Anne, they're from Lexington, Kentucky, that's super. Hello Jen from Charlotte, North Carolina. Jen's amazing, I have to say. I can see that a lot of you had various different ideas when it came to your financial goal. And now that you've actually put some detail on it, and through that link there on menti.com, it's great to see that. I have to say, it's really, really great to see that there's a lot going on there in terms of what you want. A couple of you there are telling me that the link wasn't in chat. I don't really know why that was, but thank you very much for persevering with me. Okay, so investing, learning and saving. Glenn then popped in to say good afternoon VV Nation. Just want to let you guys know that I mentioned this at the beginning. Glenn and I, Glenn invited me to be his guest yesterday on Trending Thursdays. We spoke about coronavirus, the market, oil, biotech stocks, bonds, currencies, the dollar, various different stocks that we both respectively had, options, energy, loads and loads and loads and loads going on. So if you want to check that out, if you just search for Trending Thursdays, you'll find yesterday's episode. I really loved it, I have to say. I was delighted to be on with him. He's a great guy. Then we also had Glenn is the best jockey club Messiah. He's a super guy. Yeah, I have to say. Then I can just see then like is done. Thanks, thanks so much. What is the best trailing stop for safe long-term stocks? Okay. It's very hard to say what's the best, right? When it comes to what's the best trailing stop. And of course, it is really important that the wider it is, remember, the wider the stop is, the less likely it will be triggered. But on the other hand, it means the wider the stop, the less likely it's going to be triggered, but also then that means that it's got more room to just be volatile and then take off again. So it really is down to personal preference, and just be aware of that. I mean, if you have a stock that loses 50%, are you okay with that? And because if so, well then of course your trailing stop might be in that region. But if it is that you don't want to lose an awful lot, and maybe it's 10%, but be ready that you might have to move out then pretty quickly. So it's a very hard one to say, but just remember that the higher you go, well then of course the further out it goes. And also I do think that a trailing stop is a very good idea because it lets the stock have room to grow without then falling down. And a lot of the searches in VectorVest have trailing stops in them. Cara asks me, do I use the CI? Cara, do I use the CI? Oh my God, it is my second favorite indicator. The comfort index is a stock's long-term ability to withstand severe or lengthy price declines. So yes, I use it all the time. I'm not going to get into huge detail today on it, Cara, because not everybody knows what it is, and I'd love to spend time telling people about it. So, but I will certainly. But I think it's a great indicator. Mash says, Glenn, what trailing stop do you use for your retirement safe stuff? I'm going to leave Glenn to answer that. Jen, thank you for sharing the link to the free stock analysis. That's free, as in like no cost. There really is none, really and truly. There's nothing hidden in that. So if you want to check out the stop loss that VectorVest has for any stock that you have, and the dividend yield at the relative safety or any other metric, please go right ahead. You can use up to 9 of them. Okay, so I see lots of people there checking in there. Paul McEntee, hello from Drogheda. Oh, hello, Paul. Brother Barry, Trending Thursday was a good one yesterday. Yeah, I loved it. And thanks, Glenn, for your lovely comment there. Andrea said, I've been thinking of setting stops based on my type of trade, i.e. long-term swing or day trade. What do you think? I think, Andrea, that's a very good idea. Is because one stop won't fit all. I mean, if I have a very long-term position, and there's some stocks I've had, I bought them after the crash, the 2008 crash. I sold them. I sold out of everything, kit and caboodle, in the middle of March, and then got back in towards the latter end of April. And but still, I would. So that's the only time I've sold absolutely everything. However, I bought some of those back, 2 in particular, and I don't have stop losses on them because I believe they're there for the long term. And unless we have a very, very serious correction again, I'm happy to simply hold. Then there's others There's others that I would have quite a tight stop on, and again, without getting into too much detail, because I don't want to overwhelm anybody at the beginning of the series, I've also sold options as well on stocks where I have a cushion in place if the price doesn't go really, really well in my direction. And of course, I can have the choice of closing the position as well before expiry. LF says, how often should we review and update our long-term stocks? Great question. I think myself, I do it about every 6 months. I look at the portfolio, like I have it set up I have my portfolio set up on Portfolio in VectorVest for the stocks, for the options. Then I also have a different list in there because it looks different. But anyway, the point I'm making is that I check in there round about every 6 months on everything. I'm selling options at the moment round about once a month, approximately. Round about once a month at this stage. So I would be more active than many, but at the same time, I'm personally not a day trader. I'm not in and out all the time. So that brings us, it seems, to the end of the questions, and I'm really happy that you've all contributed to our poll over here, just about what the financial goals are. And again, you see, it's in a word cloud that's anonymous. You're very welcome, Andrea. It's in a word cloud that is anonymous. So that's the whole idea, is that I just want to kind of create the sense that, we're in this together. We're all wanting to improve ourselves and our financial position and our knowledge and everything else. So that's why we're here. That's what we want to do. And I just want to, so that you get a sense what other people are thinking too. So then you see that it's not, it's not that you feel on your own, but also not where you have to commit, where you have to commit hugely. So as in commit publicly to saying exactly what you think. This kind of nice, anonymous support. That's what I want it to be. So thank you all to each and every one of you for tuning in today. Really appreciate it. Delighted that you were able to take the time to join me. We are, of course, back in 2 weeks. We will be sending out the link to this to YouTube. Obviously, it's been recorded live. It's going to be on YouTube right throughout. And for anybody that missed out on the last 2 episodes, the first one was on how men and women invest differently and how women can particularly leverage the advantage that they have. And then the last episode was 3 ways to overcome problems or what can hold you back from believing you can have financial freedom. So I'm just going to quickly check in here. Love it, Diana. Diana asks me, hi, if the comfort index is your second favorite indicator, what's your first? Thanks, Diana. Thank you. My favorite is VST. It has to be value, safety and timing. And I'll talk to you about that another time. And Margaret, thanks, Margaret. Love this session. I've been talking about investing since I read your amazing book. You're so good, Margaret. Thank you very, very much. And Paul says, thanks for that. Missed the beginning. Will it be uploaded? Absolutely, Paul. It's already on YouTube. Noreen says, thanks, Susan. Again, Noreen, thank you. And thank you for your support all the time. Paul Grand, got that. That's a real Irish thing to say. So as I say to each and every one of you, thank you. See you again in 2 weeks' time. And thanks a million for being here with us. Please do subscribe to the channel so that then you'll be automatically updated on the next show. Thank you all so much and have a very wonderful, safe and delightful weekend. Thank you and goodbye.